Hello guys. Yesterday I took basically three trade in the gold, and I will explain what was the trade idea behind this. So let's start. So this is Friday, and so this Wednesday candle gave the retracement to this daily fair value gap, and we have SMT. So Thursday I have bullish bias as well as Friday I have bullish bias. Why Friday? Because we form the swing point. What is swing point? It is a three candle pattern, and this is the first candle, this is second candle, and this is the third candle. You can see this is the swing. Like this candle form the low, and this is the higher low, and this is the higher high. Okay, so this is the swing formation. When we form the swing, something like this. So this confirms the low of the retracement or reversal, whatever, because we cannot retrace or reverse without forming any the swing point. So when we form the swing point on the Thursday, I was expecting Friday to continue to the upside, and though it is Friday, I was not expecting price to go all the way up and to this high, and I was expecting it should go and take this previous daily high. So this was my idea on the daily time frame, and so I mark the daily open because when we are expecting the expansion, what we need the small wick. Okay, first we have to confirm then the wick formation on the same on the daily time frame for that day. How we will do that? This is the daily wick. Daily wick should be confirmed by the 4 hour swing point. Okay, so where is the 4 hour swing point? This is the daily open. Price open here, form the low, and this candle closed upside within this candle. So we can expect this candle 1 a.m. candle to expand. Okay, why? Because we are failing to close below this downside. So I was expecting this 1 a.m. candle to expand because this candle 2 is closed above, this candle range. So this is showing the rejection, and we can expect continuation in this candle as well as as well as the other candles because we have still drawn liquidity intact. So we can look for expansion. Okay, when this 1 a.m. candle was forming, so we have to also confirm this candle should expand. Okay, we are expecting expansion candle. That's why we need to mark, the invalidation. Invalidation, how will we know that? Invalidation will be 50% of this week because we are expecting this week to form within this 50% of this range. That's how we confirm this expansion candle. But you can see this is the rejection, but this is a long week. So you can see this body is small. Okay, because price took so much time to form this week. So if price will take more time to form the week, then it have not so much time left, you know to form the body. So this is the logic behind the expansion. Okay, so 1 a.m. open, how did I took the entry? So here is the 1 a.m. open. Okay, so what happened? 1 a.m. open came to this fair value gap, and on this candle, on the 2 a.m. candle, I took the entry. I'll show you here. This is 1 a.m. candle. Okay, this is 1 a.m. candle. On this candle, I took the first entry and I was targeting this high. So how did I took the entry? I was expecting 2 a.m. to sweep this, to sweep this low and to expand. And do we have any kind of SMT here? Yes, we have. So we are confirming what? We are confirming the week of the 1 a.m. candle. Okay. How we confirm that? We confirm by 1 hour or 30 minutes swing point. So while this candle was forming, I took the entry. Okay. On the 2 a.m. How did I took the entry? I'll show you. See this candle. Uh, yeah, this is 2 a.m. I took entry here. Okay. I took entry here because I was expecting this candle to get swept and to continue high. Okay, see this is how form. See this expansion candle form small wick, long body towards the high. And I confirm this in the 3 minute time frame here. Okay. The main thing is, I did a mistake here. I'll show you. While this candle formed, we confirm the change in state of delivery where here. Okay. We confirm the change in state of delivery here, this candle. So on the on this 30-minute open, okay, if I'll show you, where is it? Okay, this 30-minute candle I was expecting to take entry, but what happened? This candle take the low of this candle, form the swing point and expand. This is a reversal to expansion candle. Okay, we can take entry here. But I did a mistake. This candle took this high. Okay, when we take the short-term highs and intermediate-term highs, so there is a reason for price to reverse or to consolidate or to, or whatever. There are multiple scenario can get present. I knew this, but still I get FOMO and I took the entry on, on this 2:30 a.m. candle. Why? Because this is the swing formation, candle one, candle two, and I was expecting this candle to expand. So this is not the right idea I have. Okay, I had. This is out of my plan. My plan was when we take this 1 hour and 30-minute highs, we should wait for protected swings to form, like something like this. See this protected swing. That means what? We swept the low, we close above. Now this low is protected. Okay. So what I did, I didn't wait for this protected swing to form. I just, on the 3 minute, I waited to take entry. Like totally dumb trade I took. And also I mismanaged the, risk management. I took trade here. Uh, when this candle, you know, wait, where is 2:30? Yeah, this one. I marked this low. We already took the high, you can see, and we started consolidating. I take entry when this up close candle closed above this candle. Why? Because see, this is through 2:30 open. Okay, so the 30-minute candle open. It came down, it swept the liquidity and closed above, and I took entry somewhere here. I executed market order. I kept the stop loss here, and this is the immediate loss. And this is totally invalid loss. I get FOMO and I took entry here because I thought I'll miss this move. This is totally invalid loss. Early in the day I took, and yeah, later I realize I have this is totally emotional trade. Also, my technical is not supporting the idea. Totally emotional trade I took here. Okay, then what next? Did my idea get invalidated? No. Why? Because I had the bullish bias. If I have bullish bias, this is just a kind of manipulation. You are getting my point? So if I have the bullish bias, I only will wait to see bullish confirmation. Okay, when we take the ACSSN high, this is the ACSSN highs. So there is a reason price to get price to retrace because this is a significant liquidity pull. So this is what happened. What happened on the 2:30 a.m. We retraced hard and what we did, we swept this low again. If you see, we swept this low again. So remember, we are still within this 4 hour expansion candle. So what happened on the 3 a.m. On the 3 a.m. we give the retracement and we form the swing point. See swing point. This is candle one, candle two. Okay, this is the swing point. And I again reposition myself here and I was looking to target, these highs. Okay. Uh, yeah. So here on the 3 a.m. When this candle close, I take entry. If you come to the 3 minute, so see we form the change in state of delivery here. Let me clear this jargon. Also, we form the SMT with silver here. We form the change in state of delivery at this size. Okay. So this is the 3:30. I was expecting, I was looking to take trade here at 3:30. So I'll tell you here here I took two trade. First trade I took when this candle was forming, first trade based on the this 30-minute logic. Okay, based on this 30-minute logic, that means what? Uh, where it is, sorry. Okay, I was looking to take trade here in this candle. Okay, I'll mark this one as it as. So I was looking this candle 3, candle 4, candle 5 should always should expand to this highs, and I took trade here on the 3 minute time frame. First trade. Okay, this is the first trade I took here, and this is quite high. Uh, yeah, this trade. This is the first trade. When we form the change in state of delivery here on 3:30, I took the market order and I kept the stop loss. Here. This is the first trade I took. Let me keep it here. So what is the logic? We form the reversal. How? By closing above this down close candle. So this is the valid trade idea. I took the trade and I was targeting these highs. Okay. I was targeting these highs. Okay. First trade is here. Now, what about second trade? Why did I took the second trade? I'll show you the reason. When I took, first of all, I cannot open position, full position, to two position on the same time. So when we form this another change in state of delivery, if you see here, consecutive down close candle came to this fair value gap. Okay, came to this fair value gap. Remember, this is the opening of 3:30, another 30 minute, and we form the change in state of delivery here. Okay, we form the change in state of delivery. So now this low is the low of 3:30. You're getting my point? So now price should not come below this low. So this is the invalidation, new invalidation, this one. And then what I did, I placed this stop loss to here. That means I reduced my initial position. I took 1% risk here and I reduced it now to zero point 0.5. Then I add on my position here zero point 0.5. You're getting my. So here I add to the position and kept the stop loss below. So the right entry was here, but I couldn't take entry because this candle immediately expand and I took entry somehow here, and I was risking 0.5% because I reduced my initial risk. So I add to the position here and I kept stop loss below this low. So both this trade hit the take profit. I exited right here, right at the top because it's in my mind it was Friday already. I took one trade here. Here also I did risk management error. I was risking 1%, but I got filled little bit high. Every time this thing happen, I need to keep this in my mind. So I was risking 1% here, but when I executed the trade, the actual risk is 1.7, I think. Okay. So here I took more, more loss. More loss here. And so I took both position out here because I already covered the loss. Also, I make 1% extra. So here I took, take profit at this size. And this is how the trade form. I'll show you, can you see this thing? What happened after I got out? Price retraced. Then again it started to push up, form the equal highs. Again it came, swept liquidity. Then it smashed to the upside. See how this price engineered the liquidity years. So I was monitoring the trade here also. Here we have clear entry. I share this trade with my friend also. Here we have clear entry. Why? Because we form the SMT and also the swing point. I'll show you here. Here. Okay, on this, on this 6:30, we formed the SMT, and I was expecting the 7 a.m. candle to expand. So this candle expanded first thing, and when the 7 a.m. open, if you see the 4 hour chart, how this candle closed bullish. We form the swing point, and what we are expecting this candle 5 a.m. candle and 9 a.m. candle to expand. So if you want to take entry on the 5 a.m. candle, what do you need? We need the swing point. Okay. Where the swing point from here? We form the SMT and we can expect this candle to expand. Okay. And basically we are waiting for the swing point. If you will wait for this candle to close, now we have swing. Candle 1, candle 2 and candle 3. We have swing. You can look to, take trade on the 8 a.m., 9 a.m. candle and to target these highs. Why these highs? These highs are, close highs. That means what? Low resistance liquidity, and price gravitated towards these highs. Okay. So yeah, this is the trade idea, and something I need to keep in my mind. What First thing is risk management. Risk management error, I can say, on the first trade. What happened there? The risk high due to market EX market exhibition. Okay, and second and third trade, what I have done well here, exited in the position, exited at the right area. Okay, so yeah, this is the trade I have on Friday. Yeah, this is I took three trade, which is not good, uh, but the trade idea was valid, and risk management was also in my control, I can say. On the first trade also, I risked well. There is no mistake on there. On second trade, yes, second trade, I risked 0.5%, but it due to market order, it increased to like maybe 1.6 or 7. It's quite manageable. So yeah, guys, thank you.